Hello guys, how you guys doing? Hope you guys are all fine. Yeah, I just want to do analysis on New Zealand chef. So my setup actually plays. I'm actually seeing my setup on New Zealand Chef. So I just want to analyze this so that we can also take advantage of it. So first of all, based on what I always do, if you go to this, if this is your first time of watching my video, you can go back to my previous video, so you know how I do. I always analyze my pairs. So here's how it works. The first thing you're going to do is to go to the higher time frame from the daily or the weekly and 4 hour time frame. The first thing is to look for a market structure shift. This is the market structure shift here on New Zealand card. You can see it has shifted structure. After shifting structure, you can see it has been selling for a long period of time now, and it taps on a high demand zone. Then it shifted structure from this place. And after shifting structure, it's not only shifting structure, you have to also look if it has broken structure. You can see after shifting structure, it now breaks structure. There is difference between shifting structure and break of structure. Then what's the next step? The next step is your POI. So where is actually the POI you're expecting it to come? This is the POI based on the daily time frame. I'm expecting it to come to this other block. This other block is a valid and unmitigated other block. Then what is the next step? The next step is the liquidity. Is there any valid liquidity there? Yes, there's a valid liquidity. This is the liquidity here. This liquidity here has not mitigate anywhere, so this liquidity is valid. So what will be our expectation now? Our expectation now is this: we'll be expecting this market to come down to this place and come and tap us in, come down to this place and tap us in, then boom, we buy. So where will be our stop loss? So our stop loss will be below the our entry, below there. So you put it at the protected low so that you'll be safe. So what will be our TP? Our TP will be at the high, this high here. This actually is swing trade, so you can hold it for a long period of time. So our TP will be at this high. So but we're expecting it to come and take out the liquidity before tapping us in. So that's my expectation on New Zealand and chef. So you can also take advantage of it. So we can also scale down to the lower time frame to see it clearly. So when going back to the 4 hour, note 4 is actually not a lower time frame, but I just want to show you guys something. So now this is actually the 4 hour time frame. You can see the other block I marked from the daily time frame here. This is the other block, the unmitigated other block. So now we want this liquidity to be out. We want this liquidity to be out before tapping us in. So once it tap us in, some people you can enter with confirmation, but me, I'm already setting a limit order. I'll be setting a limit order on it. So once it comes there, I think next week is going to play well. It's going to play out next week. So then once it taps us in there, then boom, we move. So that's my expectation on this page, on this New Zealand chef. So what will be our next page now? I think we should let's analyze Euro USD. Okay, Euro USD, I think I've done this analysis before, but this pair is so slow. It's a very slow pace, so it doesn't it's not like all those SAUSD that will be very fast. It's a very slow pace. So this analysis, we've analyzed this pace already from I think last week or last 2 weeks, but since then it has been playing around. It has not even come to our POI. It's just dancing around, but that doesn't mean that it's not going to come there. So what will be our analysis on this pair? Our predictions or our focus on this pair should be from the higher time frame. We have to do a top-down analysis, so you know the direction bias of the chart of the market you're actually analyzing. So you know where it's coming and where you're going. Just take note of this. Whenever you're analyzing a pair and you discover where the pace is coming and where it is going, then you've gotten it already. So based on what we are seeing here on this pace, on this Euro USD, you can see this other block from the daily time frame. This is the other block. But first of all, what will you do? Well, the first thing you're going to do is to look for a shift market structure. You can see this is actually a shift. We are analyzing a higher. This is actually a higher probability setup because we are coming from the higher time frame. This is actually the shift structure. After the shift structure, what's the next thing? Check out if there is any valid liquidity. liquidity zone. This is actually the valid liquidity zone, and it has not mitigated on any other block. Then what is the next? And but sometimes you can see this liquidity can be a trend line liquidity, so just recognize it to confirm if it is a trend line liquidity or a normal liquidity. But I'm seeing a trend line liquidity is forming a trend line. That's how it will be tapping, respecting that trend line until one day like this. What you just see, you just wipe out the trend line and tap on your, just wipe it out like this. One day you just see what you just see. One day you just bam to wipe out this trend line, then tap on your POI before going on your favor. That's how it always works. See what you just do. You see it like this, one day like this. That's how it works. You just wipe out. It will be respecting this trend line, but it's putting people in, it's creating liquidity. So one day you just see it, you take out the trend line and tap on your POI. So it always works like that. So you just need to be very friendly with the chart, so that whenever you see a setup like that, you actually know exactly what is going to happen. So yeah, liquidity is actually a trend line liquidity. So where should be our POI? You can see this other block from the daily time frame. That right candle before the bullish move is actually the other block we were expecting it to come. This is our entry. We're expecting it from this place. Sorry, we're expecting it to come to that place. Then boom, we take it up there. We've already know that the market is actually bullish. So there is no need of doubting that again. So where will be our TP? Our TP will be at the high. This is actually a swing trade. Whenever you analyze it from the higher time frame, it's always a swing trade. It's only those lower time frame, those ones that analyze from the lower time frame is those ones you just like entering the trade and we taking the and they'll be closing up their positions the same day. So that one is a day traders. But for the swing traders, you have to analyze from the higher time frame. Then once it taps you in, then you have to leave it to play around, to play very well. So this is my analysis from Euro USD. This is actually a top-down analysis. We can also scale down to the 4 hours so we can see it clearly. But sometimes whatever you see from the 4 hour, you can't see it from the daily as well. So you have to scale down to see the obvious. So this is my expectation. This is actually the trend line liquidity I drew earlier. This trend line liquidity you can see it has been respecting this trend line liquidity for a long period of time. Then this is actually the other block I mark. There's even a fair value gap on that other block there. This is other block I mark from the daily time frame. Then this should be our SA. Our SA will be below the other block. Then TP will be from the high. You can take your TP anywhere, but my TP will be on this high, this external liquidity, from the internal to the external liquidity. So maybe that should be our next topic. So this is my expectation on already. You've seen the shift. I don't want to go too down to the lower time frame. So you can also do your own analysis and look for your own buyers as well. So what should be our next pairs again? I think which pairs are we going to analyze again? I don't want this video to be much. I think we should analyze. Let's go to SEUSD. Boom. This is the boss. SEUSD is the boss. So you can see for a long period of time throughout this year, throughout the beginning of this year, you can see SEUSD has been bullish. Sometimes any bearish scenarios is actually a retracement. As I always said, we don't sell, you always buy. Look for buy, because whenever you are selling is a retracement that is actually doing, and you can also be a trap. So don't always look for sell opportunity on SEUSD. Always look for buy. So from the higher time frame, you can see the shifted structure from this place after tapping on this demand zone. After tapping on this zone, taps on this zone, then they reacted and shifted structure. So after shifting structure, what did it do next? What it does was that after shifting the structure, now breaks, it comes back down. Whenever you shift a structure, you have to look for any valid POI that you were expecting it to come. It comes down to this place and fill up this gap, and if you scale down to the lower time frame, you discover there's another block on that gap. So you fill up this gap here, Then after filling up this gap, then it moves up again and breaks structure. And two difference between shift structure and break of structure. Now break structure from this side, and after breaking the structure, it comes down back again and fill up. After taking out this train line liquidity, it taps on this other block, this for our other block, the red candle there, then taps on it and reacted. After reacting on it, then it's going to take out this high again. After taking out this high, this is the high, we're expecting to come and take out this high, then you'll be expecting it to retrace back again. It has been doing this for a long time, so you have to be observing exactly what is actually doing, because it's giving you information, it's printing out information for you, just for you to take your time and understand what exactly it's doing. So whenever it takes any high, you always see a retracement down. So now our expectation now is this. Let's scale down to the 1 hour time frame. Our expectation now is this. We'll be expecting it to come back to take out, after taking out this high here, this high I drew. After taking out this high, because this high is actually an external liquidity, so once it takes out this high, you'll be expecting it to come back a 50% retracement. You can use Fibonacci, but sometimes Fibonacci is just a tool, so it's better for you to know exactly where it's coming, any institutional reference point you're expecting it to come. So once this high is taken out, then we'll be expecting a pullback, just like a retracement. So the retracement, where will be our retracement entry? Now that's the major issue, that's the major question. So now what are we going to do? Because basically looking at the 1 hour time frame, we are not seeing any POI, any point of interest, so we have to scale down to the lower time frame. Maybe let's scale down to the 30 minutes time frame, if there is any way we can see any valid. Okay, based on what I'm seeing on this 30 minutes time frame, I'm seeing probably, I think this demand zone, I think we should use, because this demand zone, this other block has been mitigated already. Yes, this other block has been mitigated already. It touched this other block. After taking out this liquidity, it took out this liquidity, here, it took out this liquidity and tap on that other block. So that place, that zone now is free. So now I'm actually seeing another block again that is unmitigated, which is this 30 minutes other block. So we have to draw it, and you can see any unmitigated zone, you have to be very, very careful with it, because probably that will be an entry in the future. So you can see this unmitigated other block, and I'm actually seeing an obvious liquidity at the top. So let's go back to let's scale down to the to the 5 minutes. So I'm actually seeing something here, something here. You can see a shifting structure here. This is a shifting structure. Then I'm also seeing a liquidity, and you can also call this liquidity a trend line liquidity as well. So just know the concept, know exactly what you're doing. So this can be a trend line liquidity. You can draw it anyhow, because it will be respecting this liquidity until one day to wipe it out and come back. So this demand zone is valid. This entry, this POI is valid. This POI is valid. So now what are we going to do? So what we'll be doing now, we'll be expecting it to come back to this entry. You can set a limit order here, then put your stop loss below here. Then we're expecting it to come back to this place. Let me zoom out, you can see it very clearly. We're expecting it to come back to this place, and our stop loss will be below the protected line low. Then our TP is actually a swing trade as well. Our TP is this high, that high that will be taken out. So our TP will be this high there. So that's what I'm expecting on this pace. That's exactly what I'm expecting on this pace. So you can also do your own analysis and let's know your own points and your own interest on this stuff. So that's my expectation on this pace. That's my expectation. I believe you guys gonna like this. Please, if you like this, you can also comment on the comment section, tell me the next page you want me to analyze. So we move, bro, move. But take note that this actually not a financial advice. I actually just do my own personal analysis, so you can also do yours if you are a pro on this stuff. No one is actually perfect. market does what he wants to do. So thank you so much, thank you so much, thank you so much, thank you so much. So, and please don't forget to click the like button and subscribe to this channel for more videos like this, thank you so much.